Hello, everyone, and welcome to today's webinar. On behalf of the National Transit Institute, I welcome you and thank you for participating today. The National Transit Institute develops, promotes, and delivers training and education programs for the public transit industry in the United States. And today's webinar is National Transit Database, Annual Reporting for State Subrecipients. We are very pleased to have as our presenters today, Reed Catman and Courtney Springer. Reed Catman is a recent addition to the NTD team. He is a graduate of James Madison University and currently serves as a validation analyst for the Rural Reporting module of the National Transit Database. And Courtney Springer joined the NTD team in 2015. She's a graduate of the University of Virginia and currently serves as a senior validation analyst for the Rural Reporting module of the National Transit Database. During today's presentation, you can ask a question at any time by typing it in the Q&A box. If you do not see the box, you can enable it by clicking on the Q&A box on the Zoom controls, which are most likely at the bottom of your screen. If you have not already printed out a copy of the presentation that was emailed to you, I will be pasting the link in the chat box in just a bit. Now we'll turn it over to Reed Catman. Reed.
Thank you, Celendria. Hello, everyone, and thank you for joining us today for the 2022 Subrecipient webinar. As Celendria mentioned, if you have any questions as we go through the presentation, please feel free to use the Q&A feature at the bottom of your screen. Both Courtney and I will be monitoring it and be answering those as they come through. Just a quick disclaimer, the contents of this presentation are intended to provide clarity regarding the existing requirements of the FTA and NTD. Please always feel free to refer to the statutes and regulations for requirements. The goal of this webinar is to identify changes for the upcoming report year and provide an overview of NTD reporting requirements and how to apply those requirements to the system. Again, this is for the rural general public transit subrecipient reporters. Here's the agenda for this afternoon. First, we will do a quick overview of the NTD, then move on to important changes and clarifications for the 2022 report year. Next, we will review the fundamentals of NTD reporting, and we will discuss how to get started in the NTD 2.0 reporting system. Then we'll move on to how to complete the annual report, including some common reporting challenges. Lastly, we will review the validation process. Here's the contact information for the National Transit Database. If at any point you require technical assistance while completing your report, please reach out to your state. If you need assistance in accessing our published data products, please feel free to email our help desk between 8 a.m. and 7 p.m. Eastern Time. My name is Reed Catman, and I am joined here by Courtney Springer, who will be reviewing how to complete the annual report, as well as going over common reporting challenges and the validation process. Our contact information is listed here. Please reach out to us if you have any questions about this presentation. In addition to our contact information, we are also wanted to provide the FTA program contacts here, Thomas Coleman and Michidoni Smith. The key reference documents are located mostly here. This will include the policy manual, of which an updated copy should be available soon, as well as the glossary, user guide, and the COVID-19 guide. First, a quick overview of the National Transit Database. What is the National Transit Database, or NTD? NTD was established to be the nation's primary source for information and statistics on all public transit modes in the United States. It's a source of data for performance measurement, benchmarking, as well as research. Recipients and subrecipients of Chapter 53 funds report to the NTD. Subrecipients of State 5311 funds report data through their state's report. These subrecipients may include those that have received funding in the past and are still required to report based on continuing grant requirements, as well as some who report voluntarily that wish to receive Chapter 5311 funds in the future. 5311 recipients and subrecipients are required to report due to grant requirements as stated here from the associated legislation. Data from the NTD is used for several things. Some examples include performance benchmarking, research and statistics programs, formula apportionments of funding, and reports that are delivered to Congress, as seen here on the slide. NTD data is due on the following dates: October 31st, January 31st, and April 30th. These are assigned depending on your agency's fiscal year end. Your state DOT may have internal deadlines that subrecipients must meet before the state submission due date. Please reach out to your state DOT if you have questions on your report's due date. All right, we will now go into the changes and clarifications for report year 2022 that may affect your report. First, we will discuss the census. Later this year, the Census Bureau anticipates the release of updated census data based on the most recent census completed in 2020. This information may change how you separate data between urbanized areas if you operate in them. Once data is released, FTA plans to release a task in order to determine if your agency is affected by the census updates. In the task, you will update demographic information as applicable based on the new data. More training and information will be presented later this fall, as noted here. Condition assessments are the next item we'll review. In report year 2021, all condition assessments were required to be reported to the NTD. However, starting in report year 2022, the new TAM cycle begins, and condition assessments that are more than 4 years old must be updated in the A15 form. The next item, which you may have seen last year, is that unique NTD IDs replace the DUNS number for reporters. Information may have been imported over from sam.gov that could be incorrect. So we ask you to review your P10 information form located in your agency profile to make sure the address reported is your agency's physical address. If it does not match, please update your address via the sam.gov website. We will now jump into a review of NTD Fundamentals, where we will cover modes, types of service, revenue service definitions, as well as an overview of financial information. When reporting to the NTD, the service must be public. Once that is determined, the mode comes next. Here on this slide are the most common modes in the rural module: demand response and bus. Bus service is defined as a vehicle powered by a motor and containing fuel within. It can include services that have route deviation, point deviation, or deviated fixed routes. Demand response, however, is a service that is defined by scheduled in response to calls from passengers, such as a dial-a-ride. Another popular mode in the rural module is the commuter bus mode. We receive many questions on what is and what is not considered commuter bus service versus regular bus service. To clarify, commuter bus operates with more than 5 miles of closed-door service, and the same type of vehicles are consistently operated on the service. If you think you have both bus and commuter bus service, please keep in mind that the vehicles should not be used between the services on the same day. This also applies to the driver's work assignments, which are typically separate. If you are currently reporting both commuter bus and bus service, and you believe you may only need to be reporting one mode, please contact your state DOT for assistance, and we can help them determine how it should be reported and provide steps on how to change this in the reporting system if appropriate. The next topic we'll cover is the types of service. Currently in the NTD, there are 2 main types of service: directly operated and purchased transportation. Directly operated is when the service is operated by the agency and uses the agency's employees. Purchased transportation is when the vehicles are operated by the seller's employees. The service is branded as the buyer's, and the buyer is paying the full cost of the service. Within the purchased transportation category, there are 2 types: TX for services operated by a taxi provider, and TN for services operated by a transportation network company, or TNC. If the service is operated by a contractor that is neither a taxi provider nor a TNC, the type of service would remain PT, or purchased transportation. After the mode and type of service is determined, the next question is what data should you be collecting for these services? Here are some of the data points, as well as their abbreviations, that are used throughout this presentation and on the report. These data points are collected on a per mode and type of service basis, except for sponsored unlinked passenger trips, which are only collected by the demand response mode types. These are common acronyms that you will see throughout NTD materials. We will first cover vehicle revenue miles, VRM, and vehicle revenue hours, VRH. We will talk a lot about revenue service, so we should define it. Revenue service is when the vehicles are transporting passengers or are able to transport passengers. This includes layover and recovery time. Revenue service does not include deadhead, driver training, school bus or charter services, as well as vehicle maintenance. As mentioned on the previous slide, deadhead is not reported in your revenue service. This includes leaving or returning to the garage or yard facility, changing routes, or when there is no expectation of carrying passengers. There are detailed tables found within the NTD policy manual, which provide further examples of what is and what is not considered revenue service. We will review these tables in a few slides. Some transportation services, such as emergency services and non-passenger services, are not reportable to the NTD as they do not meet FTA's definition of public transportation. Please omit the financial and service data for these services from your NTD report. We've had a couple questions about meal delivery services and whether or not the service provided under the delivery is reportable. If the meal delivery does not include the active transport of passengers, the service data is not reported. If you're using 5311 funding for the meal delivery, the funding would be reported. However, the amount spent on the meal delivery service would not be reported under the mode's expenses. This will mean a mismatch between your funding and mode expenses on your RR20 form. The FTA defines public transportation as open to the general public. Although the NTD excludes services that are only open to specific groups of people, the NTD does accept transportation services for segments of the general population defined by age, disability, or low income. Additionally, FTA defines public transportation as being shared ride, which means that rides can be shared by passengers with no affiliation to one another. Floating vehicles are used to provide a quick response to breakdowns or a passenger surplus. Floating vehicles' miles and hours data is reported to the NTD only when dispatched. Please do not report miles and hours data for floater vehicles that are on standby and have not been dispatched. Here's an example of the demand response mode of what is and what is not considered revenue service. Please note that the time and miles from when the vehicle is dispatched from the garage to pick up a passenger are not considered revenue service until they reach the pickup point. On the end of that example, the time and miles from the last drop-off back to the dispatching point are also not considered revenue service. Following up on the previous slide, this is a rundown of what is and what is not considered revenue service for the bus mode. Again, from the garage to the first stop of the route is not considered revenue service, and from the last drop-off point back to the garage is also not revenue service. Both of these tables are found in the policy manual and may be helpful to review if you have questions as to what to report for revenue service. If you have temporarily suspended shared ride services during the pandemic, it's actually still reportable. However, this is only if it's temporary, and it still needs to meet the other public transportation requirements. If service has been suspended, please make sure to add details of how long in validation to assist in providing a clear picture of service changes. Trip brokering is defined by the FTA as a central clearing house that connects riders traveling between similar origins and definitions at approximately the same time. This service is reportable if brokers connect riders from client-specific transportation services to public transportation. Agencies should report the service data and revenue received from this program as organization-paid fares. Please note that trip brokerage must still be considered public transportation to be reported. Accepting passengers through a brokerage from a general public demand response transportation program does not make the vehicles open to the public. Additionally, if a client-specific nonprofit provides trips assigned by a broker, then those trips are not public transportation and should not be reported. Unlinked passenger trips, or UPT, should represent the number of passenger boardings during the reporting period. Passengers are counted each time they board the vehicle, no matter how many miles they use from their origin to their destination, no matter how many vehicles they use from their origin to their destination. When reporting unlinked passenger trips, please include all passengers. These passengers are usually classified as regular or sponsored. When reporting UPT on the RR20 form, this should be the total number of passenger trips, both regular and sponsored. For demand response, you will report sponsored trips as a subset of the total. Sponsored trips are trips that are paid for in part or in full by a third party. These may be part of a coordinated human services transportation plan. Common sponsors are the VA, Medicaid, and assisted living centers. As mentioned on the last slide, sponsored UPT should be reported as a subset of the total unlinked passenger trips for all demand response modes. Vehicles operated in annual maximum service, or VOMS, are the number of revenue vehicles an agency operates to meet the annual maximum service requirement. VOMS are counted during the peak season of the year on the busiest day, but you will want to exclude atypical days or special events. This count should include any volunteer vehicles that were used in maximum service. However, this should not be the number of active vehicles your agency has in service, but rather how many vehicles are used at once on the road during peak service. Another important definition is accrual accounting. NTD reporting requirements for financial data follow generally accepted accounting principles, or GAAP, and accrual accounting. If there are conflicts between GAAP and NTD reporting instructions and requirements, NTD rules are to be followed. In accrual accounting, the revenue is recorded when earned, regardless of when the payment is received, and expenses are recorded when the liability occurs, regardless of when the payment is made. Please see the examples here and in the policy manual for more detail. Next, we will review the types of expenses. First up is operating expenses. Operating expenses are the day-to-day expenses that a transit agency incurs. These may be for operating and maintaining vehicles, maintaining other equipment, planning costs, admin costs, as well as other examples seen here. Capital expenses are those related to the purchase of equipment. Equipment means an article of non-expendable personal property having a useful life of more than 1 year. The equipment will have an acquisition cost which equals the lesser of the capitalization level established by the government unit for financial statement purposes, or $5,000 as determined by the FTA. Lastly, we will cover capital assistance spent on operations. This is when capital funding is spent on activities that are normally considered operating, such as preventative maintenance and the purchase of tires. Please make sure to break this out of your other operating funding, as this has a different match percentage. There is a separate field for this on the RR20 form for certain funding sources, such as 5311, as seen here on the slide. If your agency is more than 2 modes, the operating costs will be broken out between the modes based on direct and shared expenses. Once the direct expenses for each mode are identified and broken out, the remaining shared expenses may be calculated between the modes based on a cost allocation method. Please note that this is only acceptable for shared expenses. There should be some expenses that are direct to each of the modes. When reporting your data to the NTD, you will report the funding you spent, not the amount your agency was awarded. Here on the slide is an example. If your agency was awarded $275,000, but you only spent $178,000, you would report the $178,000 rather than the $275,000 that was awarded. Here is a quick overview of the TAM rule. Those that receive Chapter 53 funds and either own, operate, or manage capital assets used in provision of public transportation services are required to report data for their assets. For recipients of 5310, if they do not provide public transit services, they are not required to report under the TAM rule. With regards to how the data is reported, for those in the sponsored state DOT plan, you will report the assets associated with the plan on your individual package. However, the targets and narrative report will come from the state DOT forms. If you have your own TAM plan, you will report all assets and targets, as well as a narrative report. States may have Tier 2 participants as part of their TAM plan, and these will mostly consist of 5311, 5310, and small urban providers. States are required to sponsor a plan. However, agencies may opt out of the plan, but must submit the target and narrative report data themselves. We will mention capital responsibility multiple times throughout this presentation with regards to TAM plans. Please see the list here to determine whether or not an agency has direct capital responsibility for an asset. As a note, for the third bullet point, an infrastructure asset itemized as a capital line item in the budget does not necessarily mean an agency has direct capital responsibility. An agency must also have management or oversight responsibilities for the line item project. In addition, performing minimal preventative maintenance work does not necessarily indicate direct capital responsibility. All right, next we will review the NTD interface and the account user management. The NTD homepage is found at www.ttransit.dot.gov/NTD, or at that link on the slide. This is where data products, policy manuals, and a clickable link to go to the reporting system are housed. You will click on the blue link that reads, "If you are an external user, click this link to log in." From there, it will prompt you to log into login.gov. Please make sure to set this up with the same email address you use for your NTD reporting. In addition to an email and password, login.gov will require the use of at least one secondary authentication method, such as a code delivered through a text message or phone call. Once set up, whichever method was chosen will be used when logging into the NTD reporting system. After logging in, all users land on the homepage, the Appian platform, which houses NTD, trams, and faces. Here, you will select the NTD in order to access your report. If you would like to automatically go into NTD every time you log in, you can click on the star at the top right of the NTD box, and this will save your preference. The new NTD homepage now allows the user to directly access their NTD report from the front page. You will no longer see the news feed as you have in previous years. Next is the Tasks tab. This section will house any tasks that are assigned to you. To access your report packages, you will want to ensure that you are on the homepage. From here, you will select the Annual tab, and it will populate any open NTD reports for your agency. You can access the forms one of two ways. You can either click on the NTD ID folder on the left of the page, which will direct you to the report package summary page. This route will also allow you to access related actions for the package. If you would only like to edit the forms, you can click on the pencil icon on the right side of the page, and the system will take you directly to a clickable list of forms to edit. To access the reporter profiles, you will still want to ensure that you are on the home page or tab. You will select Profile, and your agency profile will load. The profile is where you will edit your mode, agency basic information, as well as view other users from your agency. These forms usually do not change year to year. So to view the individual forms, you will click on the pencil icon on the right side of the page, which will allow you to access the P10, P20, and P30 forms. To access other profile options, click on the NTD ID folder icon on the left. Once you click on the NTD ID folder icon on the left, you will see the profile summary page. Here, you can go through the related actions to edit the P forms. Next is the e-file library. This is where you can filter through communications from prior years as well as this report year. The form library is where you can see data from previous years that has been submitted to the NTD. You will use the drop-down menu to select the package, then the link in blue for whichever form you want. These will be downloaded in HTML format. In addition to viewing the forms, under the Related Actions tab of the profile, you'll be able to print previous year's report packages in full rather than just form by form. Other actions you can complete are viewing and editing the profile forms, the P10 or basic information form, the P20 mode form, as well as the P30 to review the users for your agency. If you choose to print your annual package, you will be taken to a new page where you will click on the refresh button until the link comes up for you to download the file. Once the file is ready, you can click refresh. You'll be redirected to the previous page, and here on the slide, you can see near the red arrow, the downloadable file link will appear after it populates. If you are already a user in the system and need to unlock your account, there are two different ways to complete this. You can either unlock your account if you have set up security questions, which we'll go over in the next slide, or you can submit an unlock request. If you submit an unlock request, the request will go to the user managers at the state DOT. It is important to note that even if you are locked out, you can still log into the NTD system. However, reports will not be available to you until you are unlocked using either of the options. As I mentioned, if you've set up your security questions beforehand, you can go ahead and unlock yourself. To set up these questions, go to the top right-hand corner of your screen after logging in and select Profile, then Related Actions, and then Manage Security Questions. From there, you will be able to follow the steps to set them up. Self-reporting subrecipients have the ability to enter and edit data for their forms. This privilege is granted by the state DOT and is completely optional and at the state DOT's discretion. While self-reporting subrecipients can edit and save forms, the state DOT is the one who will submit the report. Subrecipients should contact their state DOT for any questions or technical assistance needed while completing their report. All correspondence with the NTD analyst should go through the state DOT contact. Again, the due dates your state may impose on you may be different from the NTD deadlines. All right, now that you're logged in and unlocked, Courtney is going to show you how to go through the forms and validation.
All right, great. Thank you so much for that great introduction to the NTD program read. So good afternoon, everyone. Again, my name is Courtney Springer, and I will be taking us through how to complete the 2022 annual report as a subrecipient. Let's get started. A Rural General Public Transit subrecipient, or RGPT, is an agency that provides rural public transportation service and benefits from FTA 5311 funding, or is reporting through the useful life of a 5311 funded asset. A standard RGPT reporter will have about 6 types of forms to complete, as listed here. The report package is split into the basic information form, or B10, the asset forms, or A forms, and the reduced reporting, or R20 form, which is a combination of financial, service, safety, and volunteer data. First step in working on the report is navigating to the package by selecting your Ntd ID from the homepage as seen here. You may also search for your agency's Ntd ID or agency name if you have access to more than one report. begin working in the forms, select the Annual Forms button in the top right-hand corner of the summary page. And this will direct you to a new page where the forms become clickable blue links. So you'll select the form name to begin completing the report. The first form we will review is the Basic Information B10 form, which primarily contains an agency's organization type and fiscal year period. If you completed an NTD report last year, the organization type you selected last year will carry over and automatically populate in this year's form. You may update this selection if needed by using the drop-down menu to select your agency's organization type. If the fiscal year end date is not populated, please enter the fiscal year end date that corresponds to the 12-month period in which you are reporting your 2022 data. And the auxiliary sections are typically rare selections for rural agencies, so do not select these without discussing it first with your state DOT contact. And once you have completed this form, select Save and Validate. Next, we will discuss the A10 Stations and Maintenance Facilities form. The A10 captures the type and number of maintenance facilities your agency utilizes for public transit. Report facilities based on the ownership types for those facilities. So that's whether they are owned by your agency, leased from another public agency, or leased from a private entity. The definition of maintenance facility is a garage or building where mechanics perform routine maintenance and repairs and typically service operating garages. Please note that you should not include bus barns in this count, nor should you include any type of third-party facility where you might bring your vehicles for repairs, such as a Jiffy Lube. If one facility is shared by 2 or more modes, you should report an allocated share between the applicable modes. And this can be based on any data point that indicates how much of the facility is used per mode. But one of the most common approaches is to allocate the facility based on the number of vehicles it services. So to look at an example, let's say an agency owns one maintenance facility and operates both a demand response service and a fixed route bus service. And both of the modes use this maintenance facility. Let's say the agency owns 20 vehicles in total. The demand response mode runs 15 vehicles and the bus mode runs 5 vehicles. So in this example, we would expect to see 0.75 facilities reported in the demand response A10 form and 0.25 facilities reported in the bus A10 form. And please ensure that the total number of facilities that you report across all A10 forms comes to a whole number. Next, we will discuss the Transit Asset Management Facilities Inventory A15 form. The A15 form collects basic information on facilities that your agency uses to supply public transit service. On this form, you should report administrative and maintenance facilities for which your agency has capital responsibility. However, you should report all passenger and parking facilities that your agency uses in public transit service, regardless of who has capital responsibility for those facilities. Some common examples of facility types are administrative buildings, combined administration and maintenance facilities, and just your standard general purpose maintenance facilities. Please note that if your agency reports a maintenance facility as owned on the A10 form, we would generally expect to see that facility appear on the A15 form as well, as long as your agency's use for that facility is greater than incidental. Existing facility information will pre-populate from the prior year's report, so you will only need to add new facilities as needed or update the information for existing facilities as needed. If your agency does not have any reportable facilities, please select the No Data to Report checkbox prior to saving the form. To complete this form, select the Add New button followed by Add Facility. This will allow you to begin entering data for that facility. And you will complete 3 sections per entry, and those are facility information, condition assessment, and address. We will not be reviewing each individual field in this form during this presentation, but if you have any questions regarding any of these sections or any of the term definitions, please refer to the NTD Reduced Reporter Policy Manual or contact your state DOT for clarification. And as Reed stated earlier in this presentation, any condition assessments that are older than 4 years must be updated this year. So please ensure that you review your existing facilities and make updates to this field as needed. The Revenue Vehicle Inventory form, or A30 form, is where you report information about your agency's revenue vehicle fleets. If you completed this form last year, your report year 2021 data will again pre-populate, which means you will only need to add new fleets if you have new fleets to report, or edit existing fleets if needed. You can enter new fleets by selecting the Add New Fleet button, or you can edit an existing fleet by selecting the RVI ID link for that fleet. When adding a new fleet, you will see 2 sections, basic information and vehicle information. You should complete all required fields for this fleet. One noteworthy item in this form is the distinction between the total vehicles count and active vehicles count, which we will discuss in the next slide. Another important data point is the no capital responsibility checkbox on the right side. You should only check this field if you do not have any capital responsibility for this fleet. And checking this box will remove the requirement for reporting a useful life benchmark for that fleet. Transit agencies must report the number of total vehicles and active vehicles in each fleet as of the end of their fiscal year. Total vehicles represents how many vehicles there are in the fleet you are reporting, whereas active fleet vehicles indicates how many vehicles are considered to be active as of the last day of the fiscal year. Active vehicles provide regular service and include spare vehicles, whereas inactive vehicles may include any of the following: vehicles that are awaiting sale or disposal, vehicles that are in storage or are part of an FTA-approved emergency contingency plan, or vehicles that are out for major repairs. Please remember to mark fleets as retired in the reporting system if the vehicles have been sold or disposed of, rather than deleting them. Fleets should really only be deleted if they were added to the form in error, or if you are removing a duplicate fleet after using the Add Existing Fleet function. To retire a fleet, update the number of active vehicles to 0, after which you will see the question, is this fleet retired, for which you should select yes. Oh, and please note about the previous slide, if your agency purchases new vehicles and retires old vehicles within the same fiscal year period, please ensure that you retire the old fleet and add the new fleet as a new separate RVI ID. So please do not update the old ID with the information for the new vehicle fleet. Okay, so the next form is the Service Vehicle Inventory A35 form, which reflects an inventory of service vehicles that support your agency's transit service. Agencies are required to report service vehicle fleets for which they have capital responsibility. Service vehicles include cars used for administrative staff, transit police cars, and tow trucks. Because service vehicles must be roadworthy in order to be reported, agencies should not report small forklifts or golf carts or any type of construction equipment that's not roadworthy. And this form works in a similar manner as the A15 form. So to create a fleet, select Add New. Please ensure that you report revenue vehicles on the A30 form and service vehicles on the A35 form. So in other words, you should not report vehicles on the A35 form if the vehicles are used to transport passengers. Report the service fleet information for this vehicle fleet. Select the vehicle type from a drop-down menu, which consists of 3 options: automobiles, trucks and other rubber tire vehicles, and steel wheel vehicles. Automobiles are passenger cars up to and including station wagons in size. So if you have a service vehicle that is a minivan or anything larger, please report them as trucks and other rubber tire vehicles. Estimated cost is the most recent estimate of the full cost to replace the fleet. If you do not have a recent estimate, you may report the original cost of the fleet or its insured value. And you must also report the year that corresponds to the dollar value that you report. Save and validate the A35 form once you are finished. And again, if you do not have any reportable service vehicles, please select the No Data to Report checkbox prior to saving this form. The RR20 form contains your agency's financial, service, and safety data. If you're not reporting your own TAM plan, the RR20 form is also going to be the last form in the RGPT report package. When you open the RR20 form, the first two sections are total funds expended and funds expended by mode. The funds expended by mode section allows you to manually input your operating and capital expenses for each mode that you operate. In this example, the agency only operates the bus mode and reported an annual total of $150,000 in operating expenses and $75,000 in capital expenses. You will be required to identify the different sources of funds that supported your transit system, which we will cover in the next few slides. So as you begin to report your funding sources, the system will automatically calculate a running total in the total funds expended section. In this example, the agency has reported all funding sources, which totaled $150,000 in operations and $75,000 in capital. These totals typically match as shown in the screenshot here. And as a reminder, you should report your financial data based on revenues that were expended during the fiscal year period, not funds earned. Agencies that operate more than one mode are required to capture and report actual expenses by mode and type of service. Agencies may not allocate their total annual operating expenses. So if you have more than one mode, you should determine which expenses are direct expenses and can be easily traced to a specific mode. And direct costs may include driver wages or vehicle repairs for specific modes. For all the remaining joint or shared expenses, which are costs that are incurred for the benefit of more than one mode and cannot be traced, you may allocate those remaining costs. An example of this may be a transit manager's salary that supports both the demand response and fixed route services. You may allocate shared costs by using an allocation factor such as vehicle revenue miles, unlinked passenger trips, vehicle revenue hours, or number of employees per mode. The next section of RR20, which begins the different funding source categories, is fare revenues. Fare revenues include all income received and expended directly from passengers, including donations made on board the vehicle. This section is broken down between passenger paid fares and organization paid fares. Passenger paid fares are those that are traditionally considered as passenger fares, in which a rider pays to board the vehicle and includes full adult fares, senior citizen fares, student fares, child fares, and fares for individuals with disabilities. This section, again, also includes donations that are made on board a vehicle in lieu of paying a fare. Organization paid fares are those that, as you might guess, an organization pays for or pays through a third party rather than the passenger. One common example of an organization paid fare is a university paying a transit agency to allow students to ride fare free. Please note that funds expended from Medicaid for non-emergency medical transportation, or NEMT, should be reported as an organization paid fare. If your agency operates more than one mode, you must capture and report the fares by mode and type of service. There are some exceptions to this requirement as listed here on the slide. And if your agency's fare policy meets the criteria listed here, please notify your state contact just during validation so that he or she can communicate that to the state's validation analyst if needed. In most cases, however, fare revenues can be tracked for each mode and therefore should be reported as actual data and not allocated. The next funding source in the form is other directly generated funds, which are funds other than fares that your agency directly generates. Some common examples of other directly generated funds are advertising revenues, concession revenues, fundraisers, park and ride revenues, interest on investments, contract revenue for any non-full cost contracts, and donations and insurance recoveries. If you report funds to this field, you'll see that a text description box will appear. So please ensure that you enter a description of those funds. Revenues accrued through a purchased transportation or PT agreement should only be reported if your agency receives revenues from another agency who pays the full cost of a service you provide, as long as it meets the NTD definition of purchased transportation. It really is not common for rural agencies to report funds to this field, so please discuss with your state contact if you think this field applies to your service. The next funding source category is non-federal funds. Enter the data based on what funds your agency expended from local funds, state funds, and other non-federal sources. Local sources include tax levies, general funds, and finances from local entities. State sources include state programs that support public transit, but do not include the Chapter 53 funds that a state DOT may pass through to a subrecipient. If you report other funds similar to other directly generated funds, a text description box will appear, so please ensure that you enter a description of those funds. In the federal fund section, select all applicable federal funding sources from this list of programs. Once you select a program, the corresponding data entry fields will populate to the right side of the screen. For 5311 funds passed through from the state, please select the Formula Grants for Rural Areas 5311 box and report those funds to the FTA Formula Grants for Rural Areas field. Please note that the various 5311 COVID-19 relief programs are separate line items from the main 5311 grant. Please report any such programs, such as the CARES Act or American Rescue Plan Act, in their respective data entry fields. And again, if you report any funds to an other category in federal funds, such as other federal funds or other FTA funds, you will be required to provide a text description to describe that funding program. Examples of other FTA funds include those not already listed in the RR20 form, such as Section 5308 FTA Clean Fuels Program. Examples of other federal funds include funds from a non-FTA or non-DOT federal grant not already listed in the form, such as Housing and Urban Development or HUD funds. Other US DOT funds will include funds that come from the Department of Transportation that are not FTA funds, such as the Federal Highway Administration. Again, the COVID-19 relief program funds, such as the CARES Act, CRISA Act, and American Rescue Plan Acts, are listed separately in the RR20 form. So please report funds expended from these programs, if applicable, to the appropriate field or fields. After you complete the financial data section, complete the other resources section if it is applicable to your agency. There are specific requirements for reporting volunteer data to the NTD, which is listed in the NTD Reduced Reporter Policy Manual. Please report the number of volunteer drivers and/or the number of personal vehicles in service as applicable. And please note that you do not report personal vehicles on the A30 form as revenue vehicles. Because volunteer data are required fields, if this section does not apply to your agency, please go ahead and just enter zeros into these data entry fields rather than leaving the fields blank. The next section in the form is annual service data. When reporting miles and hours, you should only include those miles and hours in which your transit vehicles are operating in revenue service, which is when the vehicles are transporting passengers or have the capacity to transport passengers. Unlinked passenger trips should reflect each instance in which a passenger boards a vehicle and should include personal care attendants who ride fare-free. Please note that while you report sponsored service unlinked passenger trips for certain modes in a separate data entry field, The total unlinked passenger trips should represent all ridership for the year, including regular and sponsored trips. So in other words, you should not deduct your sponsored UPT from your total UPT. Safety data section is the last section of the RR20 form. The thresholds for reporting reportable incidents, fatalities, and injuries are listed here. Reportable incidents are any transit-related event that result in a fatality, an injury, or cumulative property damage exceeding $25,000. Reportable incidents also include collisions involving revenue vehicles that require towing of any vehicle from the scene, which includes transit vehicles or privately owned vehicles. Finally, they also include transit-related events which result in an evacuation for life safety reasons. Regarding fatalities, please note that the fatality must occur within 30 days of the event and must result from a transit-related event. So for example, if a passenger suffers a fatal heart attack while riding a transit vehicle, but there was not a transit-related safety event such as a collision that took place, this would not actually be a reportable incident to the NTD. Regarding injuries, the passenger must be transported away from the scene for immediate medical attention in order to be reportable. If you do not have any safety data to report for the year, again, please enter zeros into all three of these fields rather than leaving them blank. If you do not have a group plan sponsor and have your own transit asset management or TAM plan, you will fill out the A90 Transit Asset Management Performance Measure Targets form. If your state DOT is your agency's group TAM plan sponsor, you will see a read-only version of the group's A90 form. The A90 form reflects the performance measure and performance targets for any assets for which your agency has capital responsibility. This is related to the portion of your agency's assets that have met or exceeded the asset's useful life benchmark. The form shows the target that was set for each asset category in the previous year, the current performance that is pulled from the current year asset forms, and a section for you to report your target for the next fiscal year period. You should also upload your agency's narrative report at the bottom of the form. The narrative report outlines the targets your agency set in this form, the progress towards those targets, and any changes within your transit system's operating environment. Again, if you have a group plan sponsor, the sponsor will report on behalf of their participants, and the form will represent the plan for the whole group. So that was an overview of the report forms for a rural general public transit subrecipient. And so next we will discuss some common reporting challenges agencies may face while completing the annual report. Reporting challenges can take shape in a variety of ways, including understanding the NTD policies, completing data entry correctly, completing all required forms and fields in the report, and addressing validation issues. One of the most common challenges relates to validation questions that analysts will attach to the report during the revision process. Analysts will send reports back with open issues if they have follow-up questions regarding the data in the report. And validation can include, but is not limited to, time series checks against your agency's historical data, logic checks between data items on different forms, and checks for values that might fall outside of the typical industry range. To resolve validation issues, agencies can either revise the data if the data requires a correction, or provide a text explanation that addresses the validation issue. Another common reporting issue relates to allocating operating expenses. So as a reminder, we've mentioned this a few times throughout this presentation, but agencies may not allocate their total annual operating expenses. Rather, they must first determine which expenses are direct costs and attribute those costs to the appropriate mode. And agencies may then allocate the remaining shared costs to each mode and type of service afterwards. Different agencies may have different direct and shared costs. So what might be a direct cost for one agency, such as revenue vehicles used for different modes, might be a shared cost for another agency. So please make these determinations based on your agency's transit operations and contact your state if you have any questions regarding this reporting policy. Another validation issue reporters may experience is reporting the appropriate funding sources for their service. So please ensure that your agency reports all of the funds that support your public transit service, rather than only reporting, for example, just the federal funding sources. Please also ensure that your agency reports the funding sources to the correct line item year over year, such as local funds or state funds, other directly generated funds, and 5311 federal funds. Agencies should only report service data for when they are performing revenue service. Revenue service does not include deadhead, and therefore deadhead should not be included in the data that is reported to the NTD. Deadhead is when transit vehicles are operating closed door and do not carry passengers. So this can include leaving or returning to the garage, or heading to or from the start or end points of revenue service. But it can also include changing routes or when the driver does not have the duty to carry passengers. Excluding deadhead from NTD data ensures that key performance indicators such as revenue speed and cost per mile or cost per hour are all accurately reflected for your agency's service. Additionally, vehicle revenue miles is an apportionment formula factor for 5311 funds, so this data is validated closely. When reporting vehicles operated in maximum service or VOMs, agencies might erroneously report 100% of their active vehicle inventory as their VOMs. This would only be correct if your agency operated all of its active vehicles during peak service during the year. However, agencies may retain spare vehicles that do not necessarily operate during peak service times. So to look at an example, if your agency has 15 active vehicles, but the highest number of vehicles on the road during the year was 12, then you should report 12 as your annual VOMs and not 15. If the VOMs you report on the RR20 form happens to be identical to the number of active vehicles you report on the A30 form, the state's validation analyst may ask about this during validation just for confirmation. When reporting a new vehicle, it is typical that an agency will report the corresponding capital expense on the RR20 form. Capital expenses are related to purchasing a capital asset, such as a vehicle, or making an improvement to a capital asset that increases its value or useful life. One validation issue that comes up is that agencies will either report the new vehicles on the A30 form or the capital expenses on the RR20 form, but not both. Additionally, please note that when you report capital expenses for a vehicle that is used for more than one mode, you must report the full expense to the predominant mode that the vehicle uses the most, rather than splitting the capital vehicle cost between modes. Agencies must inventory the vehicles that they use to provide public transit service on their A30 form if the vehicles have not been sold or disposed of at the end of the fiscal year. The inventory should represent a snapshot of the last day of the fiscal year, and the vehicles must be reported in that fiscal year when they become available for service. So after your state DOT submits the report, there are a couple more steps that must be taken in order to completely close out the report for that year. The state's assigned validation analyst will review the entire report for accuracy and consistency. He or she will compare the data in this year's report to the data submitted in last year's report to look for any significant changes, ensure that all forms have been completed, and check to see that the data has been reported to the correct fields. If the state's analyst asks about any data changes from last year to this year, please avoid providing generalized responses such as the data is correct, as these types of responses do not offer a clear explanation for why the data changed. Please provide specific responses to validation issues. The more information or context you provide early in the reporting process, you can help reduce the number of report turnovers before closeout. Here is an example of a validation issue within the asset module. An agency reports a bus as being 35 feet long in year 1, but updates this value to 25 feet in year 2. A validation check will fire in year 2 as vehicle length typically does not change year over year. There are 2 main possibilities in this scenario. One possibility is that the data was reported incorrectly in year 1, and the agency made a data correction in year 2, the current year. So in this case, the agency would simply provide this explanation in validation and would not further update this year's data. The second possibility is that the agency erroneously updated the data in year 2, and the original data from year 1 was actually correct. So in this case, the agency would navigate back to their A30 form, revert the vehicle length back to 35, and resave the form. Once the analyst has reviewed the report, he or she will return it to the state to resolve the open validation issues. As the report revision count increases, the revision time period decreases, as the report should have fewer and fewer issues with each submission. Be sure to address any items that were cited in last year's closeout letter. If you fail to correct any issues stated in the 2021 closeout letter, that data may be marked as questionable in the current validation year. This is the summary page of a report package. This table lists the number of open issues as well as total issues. You will want to focus on the number of open issues, as open issues will prevent you from submitting the report or preventing the state from submitting the report. The table also shows which forms have been validated, which appear as green, and non-validated, which appear as red. To recap, each report form has a regular save button as well as a save and validate button. If you save and validate a form, the form will appear as green on the summary table. However, if you make changes to that form at a later time, you must save and validate the form again. If you make changes to a form that has already been validated and you hit the normal save button, the form is going to revert back to red and will not turn green until you save and validate it again. There are 2 ways to view your validation issues. The first way is to open an individual report form, scroll down the page, and then click on the View Issues button to review them. The other way is to review your issues from the report package summary page. Again, select the View Issues button from the top right-hand corner of your summary page, and this will open a page that contains all of the validation issues in your report across all forms. After selecting View Issues, a new page will appear with the list of all of your open issues. If you click on the issue line item once, it will highlight in dark blue as shown here. After the issue highlights, scroll down the page to review the issue's language. After reviewing the validation information and resolution details, you can either comment in the comment box with an explanation and save your response, or you may choose to click on the View Related Form button at the bottom to make any updates to the form if you need to. Notes in the closeout letter will typically relate to incomplete reports, which could mean either the data does not conform with NTD definitions or accounting principles, or it could mean that the agency did not adequately respond to validation issues raised by the analyst. If you respond to a validation issue and notice that the state's analyst has kept the issue open with a follow-up question, please do not copy your original response and paste it as your follow-up response. Please also avoid copying and pasting the same response across multiple validation checks if the checks are asking about different service characteristics. All identified issues must be fully addressed in order for the issue to be resolved. When any of these issues occur, FTA will cite them in the closeout letter. The best way to resolve validation issues is to provide thorough and detailed explanations that give the state's validation analyst a clear picture of your agency's transit service. Explain why the data changed from year to year, or what service changes may have taken place to cause a significant increase or decrease in the data. If you find that last year's data was incorrect, please provide the correct value if you have it, or provide an explanation for why it was wrong or why this year's data is correct. Please note that FTA does not accept this response for multiple report years. Here's the contact information for our team, as well as the help desk, which is open Monday through Friday, 8 a.m. to 7 p.m. Eastern time. So thank you everyone again for joining us this afternoon. And I will now turn it back over to Solandria to close us out.
Thank you so much. Yes, thank you everyone for participating in today's webinar. Special thank you, of course, to Reed and Courtney for their very informative presentation. Just a reminder that you will be receiving an email inviting you to fill out an evaluation for this webinar. NTI always appreciates your feedback. Thank you once again, and have a great weekend. Be safe, everyone.